Today's real estate number you should know is zero. That's the amount of your down payment if you use a USDA mortgage. Welcome in. This is the First Time Keys podcast. Your host, Adam McAllister. Thank you for making this part of your day. Thank you for taking time out. I really do appreciate it more than you know for making this part of your listening or watching schedule. Again, depending on how you're catching us, Spotify, Amazon Music, YouTube. Again, thank you for being part of the conversation, part of the podcast. And today we are tackling a major question that I get asked all the time. Anytime I'm meeting with a first-time home buyer, and usually this is one of the first three questions that pops up. And many times it's one of the first ones outside of, hey, what's your name? It is, what first-time home buyer programs are out there? Well, today, this is your episode. That's right. We're going to be going over all of them. And let me tell you, there's a bunch of first-time home buyer programs that are out there. There's different types of mortgages that you can get. I think one of the most common myths when you're looking at buying a home is that you have to put 20% down. And that's just not true. There's a lot of different programs. We opened the show today talking about USDA. And again, not available everywhere, but if you can take advantage of it, and again, you're not in a population dense area, then USDA could potentially be an option. And that's zero money down. You don't need any money whatsoever to put down when you use a USDA mortgage. And to get more into that program, as well as all the other ones that are out there, today's guest, she's a 30-year veteran loan officer with CMG Financial. Her name is Wendy Landis, and Wendy is going to be diving into all of the different programs that are out there. Now, we're obviously going to hit on the ones that are right here in our backyard in Pennsylvania, but keep in mind, most of the programs that we're going to be going over are programs that are available nationwide. So no matter where you're listening at, no matter where you're from, no matter where you are wanting to buy your first home, many of these same programs are out there. And there may be specific ones for your state, just like there are specific ones here in Pennsylvania. So don't think that if we didn't cover one that you've heard about, that it's not available. It just might not be available here in PA. But it may be available in your local area. So the best advice I can give to you, and the advice I give to you all the time, is talk to a local reputable mortgage lender. And they're going to be able to let you know what programs are out there, and then secondly, which ones you qualify for. So really want to delve into this. This is going to be a long conversation, a long interview. So if you're ready, I'm ready. Let's get into it. Her very first time here with us on the First Time Keys podcast, a 28-year mortgage veteran. She's licensed in Pennsylvania, Maryland, New Jersey, Delaware, Virginia, and the other mid-Atlantic state, Florida, where everyone who's old eventually ends up from the mid-Atlantic, ends up in Florida. She is Wendy Landis. Wendy, thank you for joining us today. How you doing?
I'm great. How about you, Adam?
I'm doing great. So Wendy is a mortgage loan officer. She's with CMG Financial. And as she mentioned just before we started today's recording, she started doing mortgages when she was 12 years old.
For sure.
For sure.
Thanks for sticking with me on that story.
100%. Hey, we all have our truths, and I have mine, you've got yours, and we're happy to keep them going. So I'm going to first start because we're going to be really talking today about first-time home buyer programs. So let's start with your first experience, and that was what first got you interested in doing mortgages?
So I worked in banking. I started as a teller in the summers during college, and they recruited me into management. Became an assistant manager in a bank branch. And that was back when we used to take applications in the bank branch and make our lending decisions there in the bank branch. I really loved the lending side. So when they consolidated the lending, it the position opened. They needed more loan officers in that department. I applied. I loved it. That was what kind of got me. I was an underwriter, underwriting loans, and I loved it. But didn't love the bank world. And I had a friend who was in mortgages. He really seemed to love what he was doing, so I started talking with him about it, and he sucked me in, and been here ever since.
Very cool, and obviously pretty good at what you do. So after 28 years, you kind of know the ins and outs of the mortgage business. So really what we want to talk about today, because everyone brings up, oh, what's the first time home buyer program? And over the years, they've gone from none to one to several, and now we're at a spot where I kind of have a hard time keeping up with them all. So I want to have you on here today to really give us a background and walk us through some of the first time home buyer programs out there. And let's start with ones that no matter what state you're living in, anyone can take advantage of.
Yeah. So let's first start with what makes you a first-time home buyer. Surprisingly, it's not that you have never owned a home before. It's that you have not owned a home in the last 3 years.
Well, and if I could pause just for a second there, Wendy, what is the delineation point for 3 years? Why is 3 years the cutoff for making someone a first-time home buyer?
Government agencies have made that mark. If I knew the why behind many of the things that the government agencies say, I'd probably be rich. But
fair enough, fair enough.
yeah. So and there's certain things that people like if you've owned a mobile home in a park, you're still a first-time home buyer. That's a mobile home. That is not a deeded property. So how I often ask this question is, have you owned a home in the last 3 years, even is your name part of a family hunting cabin? Because if your name is on any deeded property, you're a homeowner. It doesn't, and so certain programs, it's only your primary residence. But most of them, it's has your name been on the deed of a home. And so, those divorce situations where you bought a home with, a spouse, you've separated, you haven't been living together for some time, but your name's still on the deed of that marital residence, you may not be a first-time home buyer.
Got it. So let's start then with a traditional first-time home buyer. This is someone who's just entering the market. They've never owned a home. They've never had their name on a deed. They don't even know what a deed is. So someone who's just beginning the home buying process and says, hey, I'm ready to stop renting. I'm ready to start looking to purchase my own home. What first-time home buyer programs are out there? How do you handle that phone call?
So I'm going to step back and say, the four primary types of loans that we have. We have VA, which are for veterans, USDA, which is a zero down payment, FHA, 3.5% down payment, and conventional. The only one that has a first-time homebuyer requirement for certain parameters is conventional. Those other programs can be used by first-time homebuyers or not. Conventional, Fannie Mae and Freddie Mac are the government agencies that oversee them. Both of them have a 3% down program for first-time homebuyers. They actually have multiple 3% down programs, but just being a first-time homebuyer in and of itself allows you to be able to buy with as little as 3% down if you qualify.
Which is great. So again, going back to one of the myths that's out there is that in order to purchase a home, you've got to have 20% down. Now, Wendy, I know you can espouse all the benefits of being able to put as much money down, 20% or more, on your first home. But unfortunately, a lot of folks just aren't that cash rich that they've got 20% down to be able to put down on their first home. But if they do, let's address that now. If somebody has enough money to put 20% down, what are the benefits to being in that position?
The 20% down eliminates mortgage insurance. Mortgage insurance is the insurance that protects the bank. And so it's not a protection for the home buyer in any way. It protects the financing company in the event that you don't make payments on your mortgage. We have to sell the home and can't sell it for enough to pay off the loan. That insurance kicks in and covers our shortage. So you want to pay as little as possible for mortgage insurance or avoid paying it is the premise that most people have. So 20% down eliminates mortgage insurance. Other than that, 20% down, you're financing less, so you have a lower payment. Those are really the benefits to a 20% down loan. But if you don't mind if I just proceed on here, like mortgage insurance is not your enemy. And
Nope,
so
the floor is yours. Have at it. Yes.
okay, so mortgage insurance is not your enemy because, like you said, 20% down, that's daunting. And if that keeps you from being able to buy a house for years, because you're trying to save that much money, while you're trying to save, the price of the homes are going up. So 5 years from now, when you have saved what you needed for the 20% down, depending on how much appreciation has happened in the market, you might not be able to buy any more of a home than what you could with a 3% down today. So mortgage insurance and paying mortgage insurance, because of having less than 20% down, if that allows you to be able to buy today and start with that gift of home ownership and all the benefits that come with home ownership, being able to buy your own paint and paint your walls and put your carpets down and decorating, but also building equity and, which is what builds wealth. If you can start that today, then the mortgage insurance is your friend, not your enemy.
Good point. So let me grab the calculator here because, I'm not great at math. You are much better at this point than I do. So we're going to take the average home price in our local area here in York, PA. Again, if you're listening and you're in other areas, you'll find out what your average home price is. But right now in our area, it's 270,000. So times 20%, that's $54,000 just in down payment. Doesn't include closing costs. That's just down payment. And we've talked about closing costs on this podcast before. I would almost take, that 54,000 on an average $270,000 home, and another third of that
Mhm.
is probably going to be on top of that for closing fees.
Yeah.
So now you're closer to like $70,000
Yep.
you would need in cash up front for down payment and closing fees. And again, we're working on ballpark numbers, but yeah, 54,000 bucks just to get into the house, where instead use what Wendy's talking about and use a program like a 3% down conventional or a 3.5% down FHA, and limit your out-of-pocket costs up front. So, Wendy, with the mortgages that are out there, the ones that you talked about, conventional, FHA, USDA, and VA, what benefit does a first-time home buyer get from them? Is there any special incentive that's there with any of those programs?
Mhm. Yep. So, well, the first incentive being that you can buy with as little as 3% down. That right there. What is one of the biggest roadblocks to home ownership is that upfront money. So, the government coming in and encouraging through Fannie Mae and Freddie Mac, to be able to do as little as 3% down. Now, if you're under a certain income limit, Fannie Mae and Freddie Mac have an additional program that allows for 3% down, but also reduces the mortgage insurance. Yes.
Tell us
So,
more.
so the mortgage insurance rate on that program is the same as it would be if you were putting 10% down on that same home. So that's a pretty big win. With mortgage insurance, also on conventional financing, it is all now risk-based. That means that what you're going to pay is tied to not only your down payment, but your debt to income and your credit score. So if you have a good credit score, then your mortgage insurance is going to be much less and even more enticing for you to be able to buy with only 3% down.
So again, it really is. We keep having the conversation of how important your finances are when you're purchasing a home. Just uh, most folks get tied up in the fun part of home buying, which is going online, looking at homes, going out on showings. But really, where the meat of home buying is really knowing your numbers and knowing your finances, which includes how important your credit score is and your debt to income ratio. That way, in your debt to income, Wendy, would you go into a little more explanation onto that?
So there are two debt to income ratios that we look at. And so I'm going to break it down here. Like, what is debt to income? What we're looking at are the debts that are on your credit report. So this is your credit cards, your installment loans, student loans, and then your mortgage. That's your total debt compared to your gross income, which is your income before your income taxes are taken out. That ratio is called the back end ratio. And then we look at what the house payment, your new proposed house payment is, including your taxes, homeowners insurance, and that mortgage insurance, compared to, again, your gross income. That's called the front end ratio. So we're looking at both of those ratios and seeing, what is an average, what is a reasonable total debt to income? 45% in general is what we're looking at. Can you get approved with a higher back end ratio? Yes, you may be. On a conventional loan, the max is 50%. So the kind of things that aren't going into that are expenses that you may have are your utilities, daycare, your auto insurance, those kinds of things. So, for people to understand, we're not looking at all of your expenses. We're looking at what is reported on credit, the minimum monthly payment. So if you're making more than the minimum monthly payment, we're not considering that. We're only looking at what is required for you to pay and that new proposed mortgage with the expenses. So, and if you're buying a condo or a townhouse that has an HOA fee, that is added into that new proposed payment as well for affordability and part of the debt to income.
And it really also stresses the point of why just because you're pre-approved for a certain amount doesn't mean you should be maxing out that total dollar amount that you were pre-approved for, because it doesn't take into account all your other expenses that you said aren't on that credit report.
Right. And that's why it's important to talk to a lender who is not going to just tell you what you qualify for. That's important for you to know, like what is the maximum that you qualify for. But an important question that your loan officer should be asking you is, what are you comfortable with? Because just because you can qualify for a certain payment doesn't necessarily mean that's where you're comfortable. And what you're comfortable with should be taking into consideration other expenses that you have that aren't part of what the loan officer is required to look at. Maybe you have medical expenses that loan officer is not asking you about. Maybe you have a hobby that is super important to you and it's expensive. One of the ones we have around here a good bit are people who own horses and they board their horses. And that's a regular monthly expense to them, but we're not considering that. So, have that conversation of what other things are important to you, like, what are you comfortable with as a monthly payment and why? And then, just because you qualify for more, you might realize that you need to press up a little bit on your comfort level. Maybe you qualify for a payment of 1,800. I'm sorry, qualify for a payment of 2,200 a month, but your comfort level is 1,800. Now you're out there, you're looking at homes, you're seeing what you can get for that $1,800 a month payment, but you're realizing it's not really what you need or want. Now you have to decide, are you okay with going up to maybe 2,000 or closer to that 2,200 that you actually qualify for? And what are you going to have to give up in life for that? And so those are the reasons why, it's important to not just know what does a lender tell you you can do, you're the one making the payment every month, so you need to be comfortable with it.
And maybe you find a house that's big enough that you can actually board the horse
Right.
inside of a spare bedroom and
Right.
then remove that payment.
There you go.
So, I mean, I grew up with horses and remember how expensive a hobby that was. Yeah, horses are not cheap. If you're deciding between a dog and a horse, you're going to have vet bills and extra expenses. Go with the dog. It's just way easier to move with a dog than it ever is moving with a horse. So
Yeah,
just
agreed.
a little tip there from your Uncle Adam. All right. So we're taking into account what our daily living and monthly living expenses are. We're looking at different mortgage programs. We discussed 3% down on conventional. We talked about 3.5% down FHA. Obviously, if you're a veteran and you've got your DD 214, you can take advantage of your VA benefit, which is zero money down. And then if you're looking in a rural area, that is where USDA kicks in. But we also need to take some other things into consideration with the USDA mortgage. And Wendy, what are some of those things?
So yes, location of the property, it has to be in a locality that is approved for USDA. So rural, like you said. But also there's income limits on USDA. You have to be under a certain income limit, and that is a total household income limit. So say you're engaged, fiance works outside the home, you're both going to be residing in the home, but for whatever reason, only one of the couple was buying the home in their name. You do need to disclose that there's going to be somebody else living in the home, and that income has to be considered for the household income limit. But if you together are under that household income limit, then USDA is more stringent on debt to income, both the front end and back end ratio. That program looks more specifically at the front end ratio than probably any other program. And so, yeah, there are a little bit more limitations on it, but if you qualify, zero down payment.
Yeah, it's a great program if you can take advantage of it. And a lot of folks are like, oh, we want to use USDA because they are familiar with or they've heard that there's no down payment. So it's super attractive. But when you get into the minutia and how the sausage is made for a USDA loan, it's sometimes, wish we could use it, but we really can't. Especially in certain areas where you've got uh, income that has exceeded what that limit is. And Wendy, that number that is a USDA income limit, salary limit, is that standardized across the country or is it per area? Like for our area here in South Central PA, what's that number?
So it is locality based by county. And so in our area, for a household of two, one or two members, you're looking at just over 100,000, primarily in our local counties here. But there's certain other counties like Bucks County, it's going to be much higher because the average income limit is higher there. The average income there is higher. So, and the areas that qualify, that changes on a yearly basis too, based on population. So the areas that are less densely populated, those are the qualifying areas. And so, it's important that you are working with a lender and a realtor that know the site to go to look for the property and the income limits.
Yeah, and as you as a consumer, you can jump online as well and find that go to
Yeah.
USDA.gov, and you can search around and you can actually type in addresses and you'll see whether or not it's included in the shaded areas or not. It's kind of a fun tool to play around with, and I think one of the most disheartening times was several years ago. I had somebody that was looking. They were pre-approved for USDA mortgage. We were in an area that was USDA qualified, but literally one side of the street was USDA and the other side of the street that we were looking on and found a house was not. And the only difference was the yellow line and the macadam between the
Yep.
yards that went
Yep.
across the street. So it is that specific. Like those lines that are drawn, they're real.
Mhm.
And it's that quick. All right. So there's programs out there to either limit to put a smaller cap or smaller amount on the down payment. There's also ways to get zero down payment, VA and USDA. Are there programs out there that help offset closing costs?
There are. So, first, we'll just state that sellers can help with closing costs if you're able to negotiate that through your contract. How much a seller can assist depends on your program and how much you're putting down on a conventional loan. So on a conventional loan, if you are doing less than 10% down, it's limited to 3%. If you're putting 10% or more down, they can give as much as 6%. FHA is 6%, USDA is 6%, VA, it's actually greater than that, and there's a whole lot of nuances that go into that.
Yeah, with VA, if you want the entire house paid off with closing fees, you can ask for it.
Right.
There's I don't think there's any limit to that closing fees you're able to or closing costs you can ask for on VA. Is there, Wendy?
There is not, and that is, I will tell you, there are certain institutions that do evaluate that guideline differently. So if your lender is telling you otherwise, that's a lender specific thing. Go to another lender. But also,
Yeah.
even on VA, your seller can even give you assistance to pay off some debt if you needed to pay off a debt in order to help you qualify. So, quite crazy benefits to VA, and just love that that's out there for our veterans who have served. So,
Yeah. Now, before you go, now,
yep,
just for full disclaimer, finding a seller who's willing to give you that much cash,
yes,
few and far between. But if you can get one,
right.
hold on to that thing like it's a new pony. But
Right. And so,
don't expect
right.
it. Don't
Yeah.
expect it. Yes.
And that's market, like right now, that is the case. It's challenging in the current market due to limited inventory across the whole nation,
Yep.
but yes, if you can run into that situation, that's great. But let's assume, because of where the market is right now, that you're not getting any seller assistance. What kind of programs are out there to help you with that money that you need up front? There are various programs. And so pretty much across the nation, most every state that I'm licensed in, there is what's called a bond program. That means it's a state agency program that offers some kind of assistance for down payment and closing costs.
So this has nothing to do with sleeping with supermodels, drinking martinis, and driving an Aston Martin.
Not to the
Not
best of
that
my
kind of
knowledge,
double
no,
oh
sir.
007.
Yep, nope, I don't think so.
I'm out. There's. I would say keep looking for that program. When that program
Right.
comes around, please call me. Yes.
So yeah, but the bond programs are great, and they vary significantly in what exactly they will give, and if there's any interest, if there's any required repayment. Many of them are forgivable. So let's talk about Pennsylvania program. They offer 5% of the sale price and a zero interest loan to be forgiven over 10 years. Incredible program. Maryland has program that is similar, but it really depends. There's different levels. Maryland's I find to be like much more convoluted because there's different percentages. It's not like the flat 5%, and the interest rate on the loan that you're on your primary loan. So on those bond programs, your primary purchase mortgage is funded through that bond program as well as the assistance. In most instances, that assistance money is an additional lien. That means it's a loan that, whether it needs to be paid back or it's forgiven at the courthouse, it's still recorded as a loan. Okay. So, there's different terms, and you just need to make sure that you're working with a lender that knows what your different bond options are. And some of them, like especially in Maryland, they work with your employer. Your employer can contribute and match monies. So, there's a number of different programs out there. And so those are the probably the first and top most beneficial. But then there are area specific ones based on counties. Most counties also have some kind of assistance kind of program. Now, most all of these also have income limits. Basically, the premise is your need has to be there. They want the money. The money's not a bottomless pit, so that they want the money going to those who have the greatest need. Now, that being said, there are some that they have multiple programs, and the amount that you're getting is tied directly to the income. So if your income is higher, you might get less money, or it might be a higher interest rate on your primary mortgage. But there's just a ton of options out there. So don't think just because maybe you have a very high paying job, so therefore you're automatically not going to be able to get any assistance. That's not true. You more than likely still can. It's just the cost of it may be a little bit higher for you.
So if you're a crypto bro who just made, $5 million on, Tide Pod coins. I'm just, throwing one out there that hasn't been invented yet, but, we'll watch it, rise and fall. Probably not going to get a whole lot of assistance, if any. But for the average American who's trying to get, put some money together here to buy a home, more than likely there's a program out there that you can take advantage of to help offset, if not your down payment, at least part of your closing fees.
Right.
Yep. Now, the other thing I also want to keep in mind, and you alluded to it, and that is anytime you're taking advantage of any program, government, whether it's federal, state, county, you're not getting that money for free. As you talked about, Wendy, a lot of these are going to be as a second loan or a second lien against it. So they're not giving them to you for free. It does need to be paid off in that period of time. So let's say I'm buying a house. I'm taking advantage of one of these programs that's going to offset. We'll use the PHFA one as an example, where it gets paid off over 10 years. But I'm in year number 6 and my life has changed. I somehow have had 2 kids and 2 dogs, and why not? We bought a horse. And we've got to move because the home is no longer, that initial home is no longer fitting our needs. We've got to sell it. What kind of penalty now am I up against because I haven't been there 10 years to pay off that initial loan?
Mhm. So most of them, there's not a penalty. It's just whatever is still remaining as a balance owed, whether you were making payments or it was forgivable, whatever is still remaining just needs to be paid off out of your sale proceeds. The beauty is, more than likely, your home has appreciated. And so you're just really what I call kicking the can down the road. The money that you don't have now, you're going to pay then, but you're going to be able to because you have equity to be able to pay it.
So you're still using the proceeds of your home
Mhm.
to pay off those remaining loans, but you're not penalized in any way by going, hey, we said it was 10 years. You're getting this thing done in 6. So here's an additional 20, 30% we're going to hit you with. It's not done that way at all.
No.
Good to know. So are there any of these programs where there is an increased penalty that someone would have to pay if they didn't fulfill that initial agreement?
Not that I know of. Not a penalty. Mm-mm.
Okay.
No.
So it's just, hey, this is what was owed, and here's what needs to be paid back.
Yeah.
All right. So again, don't feel like there's any you're not at any detriment, you're not at any risk by taking advantage of these programs. Is there are there any? I'm going to go now specifically to what you do with CMG. Are there any specific first-time homebuyer programs that I can see you lighting up? For those of you watching this on YouTube, Wendy right now is like, she's that little kid going, "It's Christmas morning, I get my present." So here we go. Let's let Wendy open up her present. And Wendy, are there any specific loans that you provide through CMG that people should know about that they could take advantage of with you directly?
So it's not a specific loan, but it's a program that we have specifically. It is CMG specific. And only CMG offers it, and it's called Home Funded. I call it the GoFundMe for home buying. So many people have a relative that wants to help them out with a gift towards buying a home. Um, and that's great. And you can, in most every program, you can get gift money from relatives. There are restrictions on who you can get gift money from. And so I think you talked about that maybe in one of the other podcasts, so not a lot of the programs, they have to fit certain parameters. So like if you have that boyfriend that's living with you that you just got into a relationship, you knew it was love at first sight. Here we are talking, it's, Valentine's Day time here.
Wendy,
And
we
so,
Wendy, we said we would never bring this up. I didn't want to make this public yet. Raul has been just assisting us around the house, and we haven't. Yeah, Angela and I haven't made it official yet. But anyway, so the boyfriend, yes.
yeah. So, and it's only been 6 weeks, 2 months that you've been in a relationship. Raul wants to help you with a gift. Raul can't. He doesn't meet the requirements of being an eligible gift donor for most loan programs. So, what Home Funded allows is any individual can help you, anybody in the community. The only restriction is no one individual can give you more than $5,000. So Home Funded is this program with you start the program and you have this fund, this account that anybody can deposit money through. You have a QR code, a link that people can use to put the money in. And as a first-time home buyer, CMG will match dollar for dollar up to the first $2,000. So you get $3,000 given to you by friends, family, community members, and we're going to give you an additional $2,000. Now you have $5,000 to go towards your down payment closing costs on the purchase of a home. And there's other great aspects of the program that are a lot of fun. It has a shopping aspect where there's links to a number of different merchandisers that you just put in the link, and a portion of your purchase money for whatever you're buying online goes into the Home Funded account. So your parents, you yourself, any of your friends, you give them that code, and as they're doing their shopping, they're contributing to your home buying account. There's, with that QR code and the link, if you're getting married and you're doing your wedding invitations through online, like almost everybody does, through like the Knot or one of those type sites, almost all of them have a gift site. And so you just put in your code, your QR code, the link there, and your guests, when they want to give you a gift, the money goes right into your home buying account. So there's just a number of really cool aspects to the program where people, you can put it out on Facebook, social medias, whatever, and tell your story, why you want to buy a home. People want to come alongside and help. And so you just gather money from whoever you can, grabbing it from the sky, and get a CMG match too. So really cool, unique program.
That is. And anybody who has a side hustle, like on OnlyFans, you can now put this QR code, into your spicy account and make a few extra dollars that way, that funds your home. Speaking of which, is there a limitation into how much money anyone can? You said there's a limit as far as no one can gift you more than $5,000.
Right.
But is there an overall limit as far as how much money can go into that?
No.
There you go. So
it doesn't expire. So, if it takes you a year, 2 years to build your credit, if you are in a situation where you need to build credit or rebuild credit, but you also need to be saving money for down payment and closing costs at the same time, great combination. So to be working towards your savings. And because of that, like shopping aspect, you could be saving those pennies and dimes add up, and you're working on your credit simultaneously. That time, a lot of times, is a challenge for people to be trying to establish credit, pay down some debt, that kind of thing, while saving. Home Funded can help with that.
That's actually a really, in all seriousness, it's a super cool program. Just the shopping aspect. Like there's an app I use to just save money throughout the year. and it's all about rounding up, and then it gives me the option to put, a dollar, $2, whatever, every week. So it has a game where you do, you know, week one it puts a dollar in, week 36 it puts 36 bucks in, weeks 47 but week 52, and then it also does the roundup when I'm shopping. And I can tell you, I've used it for the last 5 years, and by the end of the year there's anywhere between $6,000 to $8,000 in that account by itself, and it's 6 to 8 grand that I haven't missed because it's just all part of the game, and
Yeah.
it's deducting and I'm not missing it. But I'll tell you what, for if you're looking to save up for a house, a vehicle, a vacation, you know, that boyfriend you're trying to import from another country, whatever you want to spend money on, like it's a great way to secretly trick yourself into saving a lot of money. In all seriousness, I think that's a super cool program, and
Yeah.
especially like you said, if you are a young couple looking to get married, people are always like, and at this point in time, so many couples already have the dishes, the coffee maker, your usual wedding gift
Yep.
items, the candlestick holders, that you go, hey, what can we get you, dude? Here's our QR code. Help us buy a house.
Yeah.
Like that's a super cool program.
Yep. College graduates, same thing. You're sending out the graduation, you're doing a party, you know, um, get people to help you to buy a house. So yeah, if you want to check out the program, it has its own site, homefundit.com. Go check it out. You can see all of the ins and outs, and happy to answer any questions for you. But that is a way that CMG is trying to help those first-time home buyers with that upfront monies needed. That's often a roadblock.
Very cool. And if you're watching, we've just put the Chiron on the screen, but we'll link it in the show notes as well on Spotify, where you're listening, for the Home Funded. So I know that's a really really cool program that's out there, and I will tell you, take advantage of it. But this conversation also stresses the things I tell you all the time, and that is choosing a local lender. Because a lot of the national lenders, they don't have these programs, or they want to put you into a box. And I think it's one of the things that with like what Wendy's company does, where they have the state programs, they're aware of the local programs, but then they also have their own, where it's not just, hey, we throw all the spaghetti up against the wall and see what sticks, to these four basic programs that anyone has. Being able to talk with a lender who has more programs, more things that they can utilize to help you out. And again, it all comes down to what your specific need and your specific position is in order to help you buy a home. Wendy, what are some other things that you see as a key difference from local to, to again, I always call them the national companies, the ones that people are going to see advertised during a football game or a college bowl game, or a national televised event?
Yeah, I will tell you that, I've run into this just a couple of times in the last week, where the larger, primarily online lenders, uh, that they aren't tied to the state programs or the local programs. So those are big misses that they can't offer them. It's not just that they don't have the knowledge. We as lenders have to be approved to use those programs. Sometimes we have to pay to participate in the programs, and we do because we know how important they are for our buyers. And we also have to participate in doing education, home buyer education, go and present periodically, which we enjoy doing because we know how important it is. So that is, would say, one of the biggest differences, and just knowing our local market, like what, like you, they an online lender might say, "Oh, we got you approved for 150,000 doing FHA financing, and but you'll need to get 6% seller assist." And that's all great, and it may be true, but that is not going to set you up to actually be a buyer that's going to win in our market. And so, like, some of these programs, especially the bond programs, they offer, and this is something we didn't talk about. We need to. If you don't need assistance with down payment and closing costs, you may be able to still get a lower than market rate, which will help you qualify for more. So you've done the diligence, you've saved the money, or you have somebody who's willing and able and qualified to give you a gift. That's great. You now don't need that assistance, but you can get the super low rate.
Mm-hmm.
So, like, a 5.875 rate to do a conventional loan with as little as 3% down, that will increase your buying power. Or if you're not looking for more buying power, it's just going to lower your monthly payment.
Yeah.
That's a great win. So being able to make sure that you're being set up in a program that is going to help you to actually be able to get under contract and buy a home, that's important. If they send you out shopping with terms that aren't going to help you compete, you're really not being set up for success.
Totally agree. All right, Wendy, I appreciate all of your time and thank you for all of this. We're gonna wrap this up. I've got two last questions for you. We're gonna have some fun. First one is the serious. Well, they're both kind of serious, but we can have some fun with the answers. And that is number one, what is the best advice you give to first-time home buyers?
Best advice for first-time home buyers is be patient in your shopping, and make sure that you know what to expect. Know your numbers, know what to expect, and just be patient, because looking for that right home, and making sure that the terms are right for you, super important.
Great words. Yes, be patient because this can be a long, tedious process, and it's always going to be stressful because you are making the biggest purchase of your life at this point. All right, last question I have for you is what is this can be your very personal own story, but looking for your favorite first-time home buyer story. And
Okay.
this can be yours, or this can be a client who will go nameless here for the sake of anonymity, but your
Oh, there's
choice.
so many. Like, let's see. Um, uh, so I'm a softie. Okay. So somebody who came out of a really rough, bad relationship situation, didn't think that she had any opportunity to buy a home because of her income and limited resources. But indeed, we were able to get her approved with one of those programs. Um, she had a little bit of savings that she was able to use, to her benefit. And that day was such a day of celebration for her at closing, not just because she was buying a house, but she was doing this on her own for herself and her children. And it was life-changing. And, I've had a few people like that, but like this is one that was more recent. And, yeah, and she and I have kept in touch. And she, every time we talk, she just tells me how empowering it was for her to be able to buy her own home, and how much her kids just love having a place to call home, a community, their school's stable, they feel safe, all those things. That's, yes, we're in the business of selling houses, financing houses, but it's way more than that. It's a home. And yeah.
It is. No, I love those stories. I mean, it makes what we do so much more important and so much more fulfilling. And maybe let me scratch it. Not so much important. It makes it much more fulfilling and satisfying.
Yeah.
Yeah, because you see someone like I'll never forget having the meeting with someone and they had again gotten out of just one of the worst situations. And it's probably the first time in my life I saw someone who was physically and emotionally broken. And it just breaks your heart. And you fast forward a few months later, and all of a sudden, you know, they're now moving into their new home, and it's like they shed a skin. And it's like, no, that I went through hell. Now this is when my new life starts. And
Yep.
it's so awesome to see and
Mhm.
be with someone as they take that next step in that next chapter in life. So
Yep.
no, it's so cool. All right. Wendy, where can people if they want to get a hold of you, they want to learn more, how can they get in touch with you?
wendylandis.com. You can reach out to me that way. That has my contact information. You can give me a call at 717-968-3848. I love phone calls. I love that personal touch, because, yeah, we're going to build a relationship as we're working together.
Absolutely. Wendy, again, thank you so much for all your time today and all the great info.
Adam, always love hanging out with you. Thanks so much for the opportunity. It's been great.
Absolutely. We'll be right back after this. Appreciate all the time and all the information Wendy was able to give to us. Man, that was a lot. So I understand there was a lot of details, a lot of information, a lot of different mortgage programs she went over. So if you want to get started and you have deeper questions and are concerned, which ones do I qualify for? How does all that work? Shoot me a comment and let me get you connected with the right people so you can find out just which program you could take advantage of. And here's the deal. You don't have to use any of them. If none of them made sense to you of going, yeah, I don't think that's really the way we want to go, that's perfectly okay. I just want to make sure you had the information, the real information out there to know what is out there when it comes to all the different financing types and grant programs and how you can keep as much of your money in your pocket while still getting your home. So, again, hope that was all useful to you today. Again, if you want to get started, send me a message. If you're looking to connect with an agent in your area to get you started on the home buying process, you know what to do. That's right. Shoot your Uncle Adam a message and let's get things going for you. Thank you again for being here. I'll see you guys next time on episode 13 of the First Time Keys podcast. Have a great day, and I'll see you next time. See you.